All right, welcome everyone. I'd like to introduce President of the Treasury Board, Minister of Finance, Nate Horner. Minister, please go ahead.
Thank you. Good morning, everyone. Today I'm pleased to present the Government of Alberta's 2025-2026 first quarter fiscal update and economic statement. It's clear 2025 has brought its share of challenges for everyone. Our provincial neighbours to the east are projecting larger than expected deficits, and they're not alone. Geopolitical uncertainty, inflation, and unstable oil prices continue to impact Alberta's fiscal position. We're experiencing many pressures on the economy that are outside of our control. The price of oil has been up and down. This calendar year alone, we've seen oil prices fall as low as $57 US per barrel and reach as high as $80. This volatility, in conjunction with the ongoing trade conflict with our largest trading partner, has significantly affected our revenue. As a result of this volatility, we are now forecasting a $6.5 billion deficit, our first deficit in 5 years. That's $1.3 billion more than what we projected when we released Budget 2025 in February. I want to acknowledge that this is a big shift from the $8.3 billion surplus we had at the end of March just 5 months ago. We know how important stability is for Albertans, and we also know it hasn't been easy. Many Albertans are struggling with high grocery bills, utilities, and the pressure of mortgage or rent payments. And as we promised at budget, we'll face these challenges together, and that commitment stands even with a higher deficit. We'll tackle these challenges head on, making responsible choices to deliver on the priorities that matter most to Albertans. That's why careful fiscal management matters, so we can keep delivering the quality programs and services Albertans count on today and in the future. Despite ongoing challenges, Alberta's economy remains resilient and is expected to outperform the rest of Canada. We are facing less severe U.S. tariffs on our goods than we initially anticipated at budget. Nearly 90% of our top export to the United States, energy, is protected under the Canada-United States-Mexico Agreement. That means it's exempt from tariffs. Drilling activity is up, along with our oil export volumes, due to the added flow capacity from the TMX pipeline. Consumer spending is outperforming expectations with easing inflation and a resilient job market. In the first half of the year, housing starts were up 32%. Alberta's population is projected to grow in 2025 by 2.4%, a more reasonable rate compared to the 4.4% record surge we experienced in 2024. We also revised our GDP projections up from budget to 2%, and expect to lead the country in 2025. While we have many positive milestones to celebrate, Alberta still faces some significant pressures. Unemployment is expected to remain high, and even with lower tariff rates, tariffs have slowed global economic growth and made investors think twice about expanding internationally. So what does this mean for our bottom line? Revenue for 2025-2026 is forecast at $73 billion, down $1.2 billion from the budget. Expense for 2025-2026 is forecast at $79.4 billion, up $100 million from budget. This means Alberta's deficit is now $6.5 billion, a $1.3 billion increase from what was first projected. This is largely due to falling revenues from non-renewable resources, down $1.4 billion, or an 8% drop from budget. Low oil prices have driven down royalties, and a stronger Canadian dollar means we get less for our product overall. A narrower light-heavy differential drives up the price of our heavy crude and helps offset the lower than budgeted price of WTI. As of the first quarter, we have lowered our projected price for a barrel of West Texas Intermediate to $63.75 US per barrel, down $4.25 from budget. While corporate income tax revenue is up, driven by revision to corporate profits, revenue from personal income taxes is down with lower than expected 2024 tax assessments. Now turning to expenses. Operating expense is forecast at $65 billion, up about 1% or $679 million, in large part due to compensation pressures and to support collective bargaining. We deeply appreciate the people who keep our public services running. Their work impacts us all every single day. More than half of the approximately 155 separate collective agreements for public sector employees that are negotiated with unions have been signed in the current round of bargaining. There are also additional dollars for key initiatives that will enhance seniors' care, provide meals to kids, create a centre of excellence in Alberta for aviation training, and help Albertans facing gender-based violence navigate the courts. The 2025-2026 capital plan is up, largely because we've reprofiled unspent funds from last year into this year to continue to deliver on approved projects. We're building recovery communities to support recovery from mental health and addiction, and we've added $89 million to accelerate the construction of 11 new schools as fast as possible in growing communities. At Budget 2025, we included a $4 billion contingency, double the amount set aside in the previous budget, to cover unexpected in-year expense increases. We anticipated what was coming and planned ahead. By providing this increase, the government can better navigate unexpected economic pressures and support collective bargaining commitments. As for the first quarter, we've allocated roughly $1.5 billion of the contingency, including $706 million for disaster and emergency spending to fight wildfires and to replant trees affected by wildfires. This leaves $2.5 billion in the contingency to address pressures that may arise through the remainder of this fiscal year. In terms of other first quarter updates, taxpayer-supported debt is forecast to be up $1.7 billion since budget due to the higher deficit. Higher borrowing requirements have also pushed up debt servicing costs. The challenges faced by Alberta and our economy are significant. Low oil prices have resulted in a significant drop in the non-renewable resource revenues our budget relies on, and uncertainties in trade and security are more notable than ever. The oil price forecast for this year sits, as I said, at $63.75 US, down $4.25 from budget. For every dollar the price drops, Alberta loses hundreds of millions of dollars in revenue. This is a substantial change. Our government has taken a very measured approach to dealing with the highs and lows to protect Albertans and our province from those unpredictable swings. While we can't control external factors, we can control our spending to protect the vital services Albertans rely on. We carefully save during the good years, and in years like this one, we stick to our fiscal framework and make responsible fiscal decisions so that important government services remain viable for our kids and grandkids. Albertans want our government to be frugal, provide the services they need, and look for efficiencies and opportunities to speed up economic growth and stability. That's exactly what we'll do. We will protect Alberta's economic security and ensure that Alberta remains the best place in Canada to live, work, and raise a family. Thank you, and I'm happy to take questions.
All right, thank you, Minister. Now we'll move to the media question and answers. We have time for one question, one follow-up. Just ask the media to identify yourself and your outlet before asking the question. We'll start in the room and then go to the phones. I see we have some questions lined up. Yes, please go ahead.
Hi, Matt Skies, Canadian Press. Thanks for taking questions. In this update, WTI forecast has dropped about $4. Credible estimates from different agencies say that could drop to about mid-$50 by the end of the year for Q4. Are you concerned that oil prices could drop further? Sort of how much is that weighing on you right now?
Oh, we're always concerned, especially having this job. You know, I follow it every day. I think it's important to understand, you know, at budget we're forecasting for the entire year, and at every period of reporting, here we're at Q1, we take into account the actuals that we've seen. So I can tell you that the actuals to date over the first 3 months of this fiscal year have oil at $64.52. So you would need maybe 63.25 for this forecast to realize. But we take all those things into consideration and try to weigh them against the actuals.
We are in a different place from 3-4 months ago in terms of trade negotiations with the U.S. You mentioned last update that investment had stalled due to a fair bit of uncertainty. Given where we are now, how would you describe the past 3-4 months, where we are now compared to then?
Well, I think, as I said, the actual tariff implications for Alberta between us and the U.S. have been lighter than we anticipated at budget. The actual weight of the tariffs is around 3% for everything that we trade with the U.S., so that's a good thing. I'd say it's presented itself a little differently in Alberta's circumstance. I'd say the global uncertainty and a lot of the trade discussions that the U.S. is having with all of the other trading partners around the world has affected Alberta more. We do see a bit of a chill regarding large investments, a lot of dollars sitting on the sidelines just waiting for more stability, and it's definitely impacted us through the oil price dramatically. And, you know, the demand still looks strong, or is even stronger than at budget, but we're just seeing that risk weighted heavily in the market. So that's the way it's impacted Alberta.
Thank you.
Hi, Edward from City News. Minister, if the price for oil goes below that $63 per barrel mark, is Alberta in trouble? And can the province potentially be cutting services here as well, too?
Well, if it goes below that, the deficit will be higher if we don't make some other changes on the expense side. I would maybe just say this. It's much talked about the royalty roller coaster that Alberta's been on. That's very true, but the way it affects actual Albertans is when governments ratchet up spending in surplus years to try to catch up and then drastically cut in deficit years. What our commitment has been is that we'll use the surpluses appropriately to improve our net fiscal position, either through debt repayment or savings in the Heritage Fund. And by managing the surpluses appropriately, we can weather some of these deficit cycles. I don't want to immediately match our spending when oil's at $80, and likewise right now, I'm not going to bring down our spending to match $63. So we are going to have to weather some of this, but I think the fiscal rules will help us. Back to your original question, you know, we have Budget 26 deliberations upcoming this fall. We also have a program review committee that's going to look at the existing budgets of all ministries. We're going to look for opportunities and efficiencies. I think Alberta can't afford to be an outlier in many places. We are one when it comes to taxation, and that's the one place we'd like to protect. But we're going to look at everything.
And currently, teachers are in negotiations for a new contract. Would any potential raises come from the contingency fund then?
Well, we've done a few things. You know, we have put some of the expectations around bargaining into ministries' budgets, but we can't budget for what we don't know. So it will depend on where these deals actually land once they're ratified. But they will. A large portion will have to come from the contingency. Yes.
Thank you. Seeing no further questions in the room, we'll move to the phones. Operator, can you please put through the first caller?
We have a question from Sarah Cometino from Global News. Your line is open.
Hi, thank you for taking my question. So how will you be using the contingency fund to soften the blow right now?
So the way the contingency works, it's at $4 billion. Like we said, we've allocated 1.5 to date. A large portion of that is for wildfire. As ministries face pressures throughout the year, they'll return to Treasury Board and ask that we resolve them. From my perspective, I think the way you approach the contingency and asks are you start with the things that are unavoidable, the things that are legislated obligations, of which we have many, and things that we have some choice in the matter may get deferred to a later date. But that's basically the approach we take. We deal with what we can't avoid.
And a follow-up?
What kind of direction are you giving ministers right now with the potential of tough economic times? I know you mentioned that you're not looking to match this $63 a barrel, but if things continue like this into next year or the future, like what direction do the ministers get?
That's a great question. I know I updated caucus and cabinet in the last couple days. My expectation is I want them to understand that any new unbudgeted ask is going to increase the deficit at this time. So first and foremost, I want them to ask that question. Is this something that we want to borrow for on behalf of Albertans? I wouldn't rule out the possibility that we may have a spending target memo come out at Q2 before the budget process starts, much like we've seen the federal government do. We're not as fat as the federal government, so it probably won't be as high. We've done a lot of work on the spending side since 2019, but I wouldn't rule that out.
Thank you. Operator, please put through the next question.
Next question is from Jackie Carmichael from Edmonton Journal. Your line is open.
Thank you for taking my question. you described good years and then deficit year, and it looks like we're in a deficit year. When is the last time it was worse or more deficit-y than this?
Well, this will be the first deficit, if that's how this year ends, in 5 years. So it's been some time.
And your follow-up?
Yes. Alberta is an outlier in taxation, but you say everything's on the table, and that includes taxation as a consideration? And so that's going to be looked at this year?
Well, it's always a consideration for government, but I would say from our government, we have a strong commitment and belief that we really need to, look under every stone on the spending side and ensure we've done that work before we come back to Albertans and ask for more revenue on large-scale revenue reform. That hasn't stopped us from looking at revenue in specific cases. Just in Budget 25, we updated many fees that hadn't been looked at, sometimes in 40 years. So we're constantly looking at revenue as well. You might have saw the data center announcement from yesterday, where we saw that we wanted to ensure that Albertans got a fair deal if those investments do come to pass, and thought that it maybe didn't totally align with our tax structure. So we ensured that there was a levy that will be applied. So opportunities like that exist. Larger scale revenue reform. This government wants to make sure we have spending in a place we're comfortable before we have that conversation.
All right, thank you. Operator, please put through the next caller.
Our next one is Catherine Bukowski from Alberta. Your line is open.
Yeah, thanks. And so along that line, you said you may be preparing those spending targets for cabinet, but in terms of Albertans, what should they be bracing for? What's your message as they prepare for this government to be frugal?
Well, I don't think I would tell Albertans, I know the Premier's comment was Albertans should brace themselves. I guess I would say Albertans should be prepared for, a government that's looking at everything and doesn't want to be an outlier in any way regarding spending. We still have, a lot of our programs are still the highest in the country. We do have to look at those things unless we want to increase the debt and deficit even higher. It's going to be part of a process. The process is the thing we can lean on, and we have the fiscal rules to guide us, which I'm grateful for. Continue to keep our spending growth, below population plus inflation. Do everything we can to stay within the contingency. That's the rules that we've legislated ourselves to live by. And that's been seen favorably by credit rating agencies. They want to ensure that we spend the surplus as well, and then we can manage the deficit years.
All right, thank you.
So
go ahead.
Yeah, at what point? Once you've dealt with the spending side, do you have that conversation about revenues?
Yeah, I'd say right now we have the strongest balance sheet in the country by far. Our net debt to GDP is predicted to be, by the end of this fiscal year, 8.7%. The next closest province is Saskatchewan at about 14.5%. Ontario and Quebec are close to 40%. BC's doubling their debt within one term. I think that we can lean on the strength of our balance sheet and weather a lot. But it will be a conversation that will have to be had down the road if we stay in this range of oil prices long term.
All right, thank you. And with that concludes the time we have available for today. If you have additional questions or follow-ups, please don't hesitate to reach out. My contact information is found at the bottom of the news release. Thank you. Goodbye.
Okay, thank you all. Did you all get it?